Sign up today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 369. NASDAQ is down 11. S&P is off 22. Gold contract up $5.40, trading $19.10 an ounce. You got silver down 10 cents, $24.56 an ounce. Light sweet crude off a buck, $38.80 a barrel. Notes and bonds. You get the 10-year up 6 ticks, 138.17. The 30 up 26 at 173.14. And once again, folks, bottom line, those notes and bonds look like they're going to save themselves, man. They rejected the lower price on Friday, and they jumped into the lower range. It looks like they're going to go back topside. King dollar. King dollar up 249 ticks, trading 93.017. The euro is at 118. The yen is out here at 104.95, and the British pound is at 130 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good Monday morning. Not many weeks like this week, man, when you add up all the variables in play in terms of quite a week of earnings. 186 companies, man, and some of the biggest out there. Thursday, right? We got Apple, Amazon, Facebook, Google. We get third quarter GDP on Thursday.
Wow.
And we're 8 days away from a presidential election. We'll see what happens, but not many weeks like that, man, for sure.
No doubt. And you talk about some divergence out here, folks. If you take a look at this NASDAQ, right, this is pretty amazing. So let's just look at the NQs first. Doesn't mean it's going to hold either. That's the other side of this, but this is pretty impressive. We take a look at these NASDAQ futures, and what you're going to see out here is that you had the NASDAQ futures down approximately $100. At 8 o'clock, we're at 11,552.
Sure.
Which is 114 points up from that level. Inside of the NDX, so let's see what the mover is. You got Zoom is up 3.8, AMD's up 2.7, DocuSign is up 2.5, and you got, I think that's Seattle Genetics.
CGen?
Oh, no, CGen. CGen's up 2.1. Taken away from it, Alta Salon down 3.6. Ross Stores up 2.8, and we get Marriott down 2.7. So we'll see how this shakes out. Let's just go look at this S&P for a second. So that's quite a divergence, though. There's no two ways
about it. It sure
is.
It caught me off guard a little bit when I went to do the 10 o'clock update. I was just jumping around. I said, whoa, Amazon's up a good amount. And I said, whoa, Zoom is up. Some of those stay-at-home stocks, man, as the market pulls back. And, I talked about it on my program, man. We could talk about it a little bit during the hour at some point in terms of like 83,000 cases back-to-back days. Pretty stark numbers. Wisconsin getting extremely hard hit along with some of those Midwest states. So tough numbers, man. And the vaccine, it looks like it's coming, but it's not coming tomorrow. And so in the market, some of those stay-at-home stocks, I think, really getting a pop as these numbers really accelerate in the U.S. and beyond.
Yeah. And so if we stay with the Qs for a second, folks, this is what you want to keep your eye on. So the Qs did trade at 282.17. 282.79 is the B point of an ABC structure down. Now, we had gone for that after that on last Thursday, and you rejected it. You only had you got below the price again. You had 32 million shares, though, versus 36. Now, you need 36 million shares. So the bottom line, we'll see how this shakes out today. But that's quite a monster divergence. Now, over in Germany, if you want to see a major stock getting totally smoked.
I saw that email you sent me this morning.
This is pretty amazing, folks.
Man. SAP, yeah.
This is SAP. It's down like 22%. I mean, this is something major. And if you don't think it's going to start hitting our equities, you're out of your mind. This SAP, folks, okay, is not only just a major company. Well, here, let me just see what. You got a million copycat, not a million, but there's plenty of stocks that. Okay, so it has a. what's that, 122 billion? That's not that much, not a trillion. Market cap. Oh, that's in euros. Okay, that's going to be in euros. They're taking 28 billion euros a year. They used to make money. Well, no, they still make money hand over fist, but let's go see what CRM is, because this is the same type of subscription type business. CRM, right? CRM, Salesforce. Yeah, it's not even really, it's not hurting it. So we'll see why that I didn't read those articles, but that would be like Apple opening down 24%. You know, I mean, that's how big, basically, you know, an SAP is to the DAX, as you know, one of our large. More like Oracle. Cool. Thanks, Dan. I appreciate it. The SAP is more like Oracle. Okay, so let's go look at Oracle. Let's go see. So database software, I guess, right? Yeah. I see. Okay, so Oracle did it. Interesting. Okay. So Oracle gapped down too. Yeah.
Yeah, they dumped a lot of guidance, I think, to the negative side and their outlook in terms of when they were even providing it. There was just a lot of negative speak in terms of their expectations for their company that are hitting it in a pretty dramatic fashion.
Yeah, I mean, pretty intense, right?
yes.
Oh my God.
And hey, how about Dunkin' Donuts?
I know, man.
They're gonna get sold Inspire Brands. I mean, did they say it's a private label? Maybe it's private equity.
It right? is, and they're very attuned to big chains. They own Buffalo Wild Wings. They also own Jimmy John's. These you know, this fund.
Oh, here we go.
Really knows what
11,000 Arby's.
Arby's,
Sonic.
Too. Okay.
Jimmy John's.
Yeah.
Sonic, Jimmy John's, Arby's, Buffalo Wild Wings.
Yeah. They know.
So they think that Dunkin' Donuts is being underutilized, man, and they might be correct, because down here, right, it's kind of like a second thought almost. Dunkin's down in Florida, you know, and maybe they have an opportunity to expand things a little bit better. I don't know. That's...
No, I think they do. I mean, yeah. You know what happens, folks, and you know you've heard the story before, but you know, I'm going to just go over it again because it's such a mind blower. So picture this: as Tommy and I, we go back and forth to Boston, right? I mean, we haven't lately, but okay, normally, you know, we go back and forth to Boston, right? So picture this: you're in Tampa, right? And of course, you know, the bottom line is that, you know, Starbucks is the deal, right? You fly into Boston Airport, and Starbucks is empty, and Dunkin' Donuts has a line like with 30 to 40 people, folks. Okay,
you got it, man.
It is just the opposite. It's amazing. Okay.
Yeah.
And you know, the bottom line is that I would say that, you know, once they went from a coffee chain, you know, to selling a lot of food, and I think they're going to keep growing, man. You know.
Yeah, maybe they obviously see value that they're not capitalizing on to spend, you know, a premium over the market in terms of what they're putting in there. And my experience down here, man, is it's not as enjoyable in those Dunkins down here than it is even a Starbucks, you know? So maybe they need a little revamp for the Dunkin' brand beyond Boston.
Right, totally. Stay right there, folks. Tommy and I come right back. Dow's down 372, Nasdaq's off 27, S&P's are off 25. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials down 371. Nasdaq is off 18. S&Ps are off 23. And Jack Ma, Tom.
Oh, boy.
This is quite a story, folks, okay? No doubt this is a China story, but, Jack Ma's wealth is going to surge above Walmart heirs' record. Now, that's individual heirs, not if we put Walmart together, folks, okay?
Sure.
But it's a big one. This was a former English teacher. He co-founded Alibaba with 60 grand. Pretty amazing. Now he's going to be he is the 11th richest person after Ant Group priced the share today. Ma's 8.8% stake is worth $27.4 billion. That will put him somewhere about at $71.6 billion. Pretty amazing, man.
Did you see that? He's going to be above Larry Ellison. Larry Ellison is not going to be happy with that.
No, he's not. He's not. You just give Larry another couple years.
He's got his teeth into TikTok, man. You might be right. So
there's no doubt. And that's quite a story, though, man.
It is.
Wow.
It's and the size of the IPO, right? I have the article up here as well, man. There's so many stories going on today, but Jack Ma's, so they're going to raise $35 billion.
Yeah.
They're going to raise, let's see, they might be able to raise $40 billion after exercising options, and that's going to put it at 300 and something billion, correct?
Yeah.
$280 billion before the IPO. They're going to raise $34 billion, so somewhere in the neighborhood of about 300 billion, 320 billion. There it is, right here. Yeah.
And we know what's amazing about this. If you remember how much publicity there was that Saudi Aramco was going to be the biggest IPO ever, right? Well,
sure.
They beat Saudi Aramco. Saudi Aramco was $29 billion.
And as much as China has their teeth in every company that's operating over there, I would much more likely trust buying a share of that company than buying a share of the Saudi state oil company.
There's no doubt.
Isn't that, I say it almost tongue-in-cheek, like, of course, man, because the risks that come with buying the Saudi oil state, they just raise the taxes on the company and boom, what do you can't do anything. That's it.
And this whole deal, the Ant Group, folks, is really just starting. The Ant Group,
that's legitimate. They're going to,
It's a monster financial company. Everyone uses their apps. Okay, so I mean, it's insane.
And you have risk anytime you're buying like a company like that, because there's much less transparency in those markets than there is here. But I completely agree. We all have there's risks in everything you do. You just got to quantify that risk if you can. There's a risk. It's probably worth the risk when you think about the potential reward for a company like that. That is, just a financial behemoth on the way to probably bigger things.
Yeah, there's no doubt. There's no doubt. Let's go to the gold market. So gold is holding up. Bottom line is well, last Wednesday, folks, what you had a little, not a sign of strength, but you did go top side. You had some volume in it. We've continued to reject lower price out here. This is, long sideways move. There's no two ways about that. Once we came off those highs of August, we've been going sideways since then. So we'll see whether this can get the action going topside. My take is that we still are going to get it. And this has to do with the U.S. dollar. There's no two ways about this. When you take a look at it, the dollar is still hanging tough. Gave it up last week again. We'll see what ends up happening out here this week. It's trying to get higher as we speak. Now, if we go to the bond market, this is so intriguing, Tom. It's amazing, okay? It's
sure.
This bond market, folks, okay, every single time, okay, that this thing starts breaking lows. In fact, let me show you the TLT first, because you can see it much better in the TLT. So the TLT is the 20-year plus. And what happened is that the low of June 5th, or the high of June 5th, is 156.16. The low was 153. Well, what happened Friday, and that's a high volume low, 17.7 million. Well, the TLT got down to 156.75. I wish it actually got that, and it didn't hit the 16, 156.16. But that was a number, man. And it's like, okay, man, are you going to try to save yourself again? And my take is that it's going to, folks, okay, which is pretty amazing because this was quite a breakdown percentage-wise and technically inside of the 10 and the 30, So it looks to me like, hey, it's going to try to basically get the 30 has to get back on the other side of, look at it, already made it this morning. 173.16 is the number. And we'll trade 173.13.
Yeah.
Hit 173.20.
It's interesting when you look at those two from that area in June there where you had the 30-year, right, trade down there, and we're right back near that range. And that's what you're saying, right near that low. The 10-year, not even close, though, right? We actually flashed down to like 136.30, so under 137, and a little bit more muted, as in not quite the move that it had back then.
Right, and the thing that's wild there, folks, is that's where this was turned into a total breakdown. And guess what? It doesn't look to me it's gonna. And
it was a pretty short-lived breakdown, man, right? 3 days to the downside and 3 days to the upside, and you were right back up to where the range had been. Yeah.
Right. If you go short those bonds and notes, folks, you're taking quite a risk, because the Fed's already told us. The thing that was amazing about this move down, Tom, was that it was so consistent, right? And then it broke it, took it apart, and I'm saying to myself, man, this is really wild. The Fed flat out can control this. The Fed folks can control the short end, not the long end. The 30, they really can't deal with. The 10, they can deal with all day long. Okay, the bottom line. And, it looks to me like they're going to save it again. Either that, or this VIX is still saying flat out that, guess what? The volatile is going to come in the marketplace, and guess what? The Dow's down 400. Well, the NASDAQ's down nothing, but the Dow goes down 1,000 points. You'll see bonds, notes and bonds go up 2 full points, and like in a heartbeat, because people just want to get their principal back.
There's quite a week, as I said, to kick things off, man. There's nothing wrong with taking your investments off the table if that starts in any fashion, man.
Oh yeah. Oh, you get delta neutral, you get hedged out. Right?
That's what I mean, right? Just in some fashion, whatever it is, right? That it really is, because that GDP number Thursday is going to be enormous, and then we're going to be coming into the weekend right after that of the presidential election, man. And it looks like no stimulus. That would be pretty surprising, to say the least. So, and then you, I was just going to say, and then you get the biggest day of earnings for the biggest companies in the world all on Thursday, man.
All on Thursday, yeah. And neither side, folks, can turn around and say that they're going to stop talking. We're going to hear this right up until next Tuesday, Monday night. maybe they'll stop Sunday morning.
No, I agree.
Yeah,
it's because you can do a deal right after the election. You can do the deal the day after. Congress still has, it's a lame duck, right? But that's what they talk about.
And what is happening today is that the Senate's leaving today too, folks. That's the other side of it. The House has been on vacation. The Senate's leaving today. If you think they're coming back, well, guess what? I think that's a real long shot. And they're politicians as well, man. They got races, a lot of them. Oh, yeah.
And they're just there's no incentive to do it ahead of the election at this point. They wait, they see how the election plays out.
And
see whether.
Guess what? The election, there's already been 50 or 60 million votes cast. So this is...
It's wild. I know.
The next elections, people are going to be aware of this. That's a big number, man. That's probably a...
It's changing how we're doing things. Early voting, voting by mail, same deal.
Stay right
it's
there,
good.
folks. Tom
Get out there and vote.
Back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is down 474, Nasdaq's off 69, S&Ps are off 37. So the Nasdaq just woke up, Tom.
They all kind of just woke up, and but the Nasdaq, I hear you, negative across the board, man. We got a little selling going on right now in the last few minutes.
Yeah, so let's go. We'll bring this up again, and I was just looking at this, and it's so Zoom. So picture when we first started the program, you know, Zoom was up almost 4%. Now it's 2.3. And you'll see, you know, the bottom line, it doesn't take much, right? Zoom had hit 541. You're at 522. We go to, what was the next one out here? That's still, I think it's AMD, right? Yeah, AMD. If we pull up AMD,
yep,
you're going to see same basically type of setup.
They just gave back half of their gains, almost $1.50.
Exactly.
Now they're still up $1.60. Yeah.
Right, and let's just go to the next one. Oh, that's Amazon. But Amazon wasn't
they're
up
still
there
up
before.
decent, actually.
Yeah, that's actually different, right?
They're $30 off their high, maybe, but did pull back. I mean, Apple shares. It's kind of across the board. You just got to sell and everything, man. Apple was up to 116.55. You just gave back $1 in a heartbeat.
Right, and what you do have, folks, it is very unusual that you can get, the Dow and the S&P down like we are, and the Nasdaq hang tight. Now, I can totally, when I was coming in the car, I was listening to Larry's show, Tom, and it was the exact same thing. I'm hearing that the Dow was down 350, and Larry just said the Nasdaq just made a 100-point pop, and I'm saying to myself, okay, something's not right here, meaning that maybe Larry meant it was going down. No, it was going up 100 points. You know.
And how about the DAX overnight, man?
Yeah, and
2.7%, somewhere around there is the last time I checked.
Monster move. And what will end up happening, folks, is that I won't get the volume until I'll have it by the afternoon show.
Sure.
But the DAX looks to me like, you're basically breaking down all the way from June. If the DAX breaks the 12,253 mark, it hit a low of 274 today, then it's curtains, man. Then it's curtains down to May, which is pretty intense. Now, inside of the DAX, this is SAP for sure. I mean, look at these numbers. We can do the same thing.
There you go.
Yep. I mean, look at that. You got, God, 26%.
Look at the volume compared to the daily volumes on the average. It's 14.6 million, and everything below it's like a couple 100,000 shares traded.
I know. And this is pretty cool, folks. What Tommy just brought up, that you get to see, the DAX in Germany, they're very powerful, okay? Very rich nation, no doubt about that. But look at how much bigger we are and how much liquidity there is in the United States markets versus the DAX. I mean, look at this. You're talking about, because the DAX, folks, basically resembles the Dow Industrials. And you can see, 117,000 shares. What, really? 9.2 million, really? Do you know what I mean? It's pretty wild, man. It really is. They're very powerful companies, but they just don't have the type of action that, the U.S. basically markets do.
Not even
our
close.
markets
Totally.
are basically the deepest with the most liquidity in the world.
Definitely. We get those economic powerhouses, man, up and down the line, for sure.
There's no doubt. Hey, let's go take a look at, I believe the housing numbers come out, and they were a little shot. Here, let's see what we got here. So new home sales in the U.S. fell slightly in September while remained elevated, suggesting demand is being restrained by lean inventory. Purchase of new single-family dropped 3.5% from August to 959,000. Sorry about that, folks.
Annualized pace, yeah.
The median forecast was 1.03. Extremely low borrowing costs, greater buyer appetite for suburban properties has powered residential investment and adding the third quarter economic. Yeah, tell you, what's going to be interesting, here is that, so 3 of the 4 regions showed slower home sales in September. Purchases declined 4.7 in the South, 4.1 in the Midwest, and tumbled almost 29% in the Northeast. What I've found is this.
I'm sorry? The Northeast. That's just quite a Northeast number. Wow.
It's you have high-priced markets that are very hard to figure out how, to me, they're very hard to figure out how people can actually afford them. And it definitely has to do with the amount of jobs. There's a lot of jobs up there.
Oh,
but
sure.
Those are the markets that are going to go first. And then, if you saw this, Tom, did you see that thing? I meant to send it to you. Do you know that Tampa is the #1 place that people are moving to?
I did not.
Yeah. So picture this, folks. This is, if you Google this out of Bloomberg. Last week, okay, the 5 top places, Tampa, where we are, it should be the #1. Trust me, okay? It's an amazing,
right.
Tampa, Clearwater, St. Pete, this whole coast, the west coast of Florida is phenomenal, and it's brand new. So That's the number one place. But then in Florida, then you get, I believe, Orlando, and I think Miami is there. Out of the top 5 in the country, 3 are in Florida. And it totally makes sense, because we have the weather, we have the, a different tax structure. What does happen is this. People always keep hearing about the tax structure. Our property taxes, however, folks, are really high.
Yes.
So there's one thing not paying, your state taxes, but we have very high property taxes in the context of, what happens.
Sure.
So it's not like you don't pay taxes down here. Trust me on that.
Yeah. But we are helped by all those tourist dollars, which are lacking right now, man, in a big way.
It's a big deal. And what's sad, what I hear all the time, Tom, is that I've seen people, they think that, housing has gone up tremendously. And so they're always remembering back to 2007, 2008. Then they sell their house. Then they're looking for another house. And it's like, oh, my God. Okay. It's like, you know what it's like, folks? And this is, I don't say it to them because they don't know most of the time I'm in the market when I'm moving real estate, is that you have a great stock, you sold it, and then you want to buy back in, and you're just waiting for it to crash. And a lot of people are waiting for a real estate crash right now, which is like, oh, my God. Like, the numbers aren't there, folks, okay? It's
and
just
the one
not
thing
there.
you need is a place to live. You
Yeah,
don't need
totally.
exactly money in equity, right? I mean, if you're a long-term investor, you should probably have some money in equities, but you really don't need it versus your point you're making is you're going to have to pay someone to live somewhere.
Yes.
At a time. You can't just, which sometimes, man, I mean, right now, I wouldn't fault anybody for saying, listen, I'm just going to pull my money out of the market for like 3 or 6 months and let the economy and everything, it's worth 3408 in the S&P. You have an opportunity cost maybe or something. But like you said, if you pull yourself out of the market in housing, you can't pull yourself out. You got to be somewhere. So be careful of that.
So
right?
I was showing a house yesterday. This is great you're bringing this up because that's exactly the conversation I had with this woman. Well, she had the conversation with me.
Yeah.
So picture. She had sold her house, made good money, and evidently she didn't go into the rental market to find out what the rents would be, right? She said, I can't believe this. She says, I was only paying $1,700 a month in my mortgage, and I owned it. Now I'm going to be paying $1,500 for
at least
600.
Yeah.
No, for only a 600 square foot apartment.
There you go, right. And you're talking $20,000 in 1 year, just like poof.
Right.
Even if you're paying a mortgage, man, you're still, accruing $400, $500, $600, $700 in equity.
And you get the tax write-off, right?
Exactly. Yep.
Stay right there, folks. Tommy and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrial's down 512, Nasdaq off 86, S&P's off 42. Let's go to our man Nabel in Atlanta. Nabel, how you doing, man?
Hi, Tom. Hi, Tommy. How are you guys doing?
Good morning.
We're doing good, man.
Morning.
Doing good, man.
So,
Excellent.
what are we going to look at here?
I have a couple of them, but if we don't have time, one will suffice. The first one is Etsy.
Let's take a look. So you get Etsy. This is definitely an at-home company that has gone on a nice run, big time. Lows 29.95. The highs 154. You're up $1.70 today. Now, do you own this, or are we looking to buy it? What are we doing here?
Yeah, I'm looking for an entry point. I don't own it yet.
Okay, so I'd let this be then for a bit. You can see Wednesday, you come down with some juice, so you're going to get at least to that low there, which is the 132. You're at 139. Let me bring this back and put it on a larger basis. Wow, what a run this is. So this ran, folks, from $29, like a 5-bagger, up to 154. Okay, so you get back inside 138. What I would do is this, Nebel. I would just hold tight, man. Because it looks like it's going to fail when it broke out at this 138 to 141 was the number when it got up there. And if that's what you get,
okay,
then you'll have a shot to buy it at the other end of the consolidation, which is 103.
Okay. Awesome.
It'd still be in great shape. I mean, it went up so fast that it's like, okay. And what's the other one?
SPCE.
SPC.
How does that one look like? Yeah.
Okay, so... Oh, Virgin Galactic. Okay, so the low's 690, the high's 42. You're trading 1830. Oh, this is getting ready, man. Yeah, I can see this. Let it fill the gap, man. It's just coming into the gap. 1587, and this has a high volume target of 27, which is great. It broke top side again. This would be a classic. You get a breakout. You come back to the breakout. You have lighter volume. Yeah, this is a nice setup, man. But at the gap.
Okay.
At that gap.
Okay.
Cooking, brother.
Excellent. Okay.
Have a great one, man. Have a safe one.
Thanks. You too, guys. Bye.
Bye-bye.
Thanks, Nebel.
Hey, did you see Brady?
I sure did, man. He's making a name for himself in Tampa Bay, man. At a time when the Patriots. Oh, I saw my Patriots too. They're struggling, man. That's Cam Newton. He's got to pick up his A game, man. Tough shoes to fill. The greatest football player maybe ever to live, and I'm being kind, as in the stats in terms of what do you play for? You play to win the game, man. 6 rings. To come in right after that, but boy, there were some tough plays yesterday. I was watching that game with Cam Newton under the helm, man. It's football's a tough game, man. You got to be quite a competitor at the quarterback position, and they're 2-4 for the first time since I think the year 2000.
Well, you could see it flat out. Listen, folks, if you have a chance to see that Patriots game yesterday, I mean the Tampa Bay game, Brady, he shined like you've never seen anything in your life. And what I think it is this, and this is why the Patriots even couldn't handle it last year. He didn't have enough people to pass to. Brady has so many people to pass to right now. But if you saw some of these passes, it was unbelievable. He's moving. The tight ends are moving. It was like incredible. I mean, the athleticism.
I agree.
Is amazing.
I agree, man. And watching professional sports, it becomes so normal that you don't realize how amazing some of it is, man. I was watching some of the highlights of the game last night between Seattle and Arizona, which went down to like the last second in Arizona with a comeback. And, man, there were just quarterback passes and plays from both sides. But there were a couple passes in that game that just literally dropped right into their fingertips as the guy's extending. You're talking about 2 inches over the defender, right, who somehow is staying step for step with this receiver 40 yards down the field, and the defender misses it by like 2 inches, and the guy catches it for a touchdown as he lays out. I think that was a Seattle play in particular. It's just amazing, man. It is, yeah.
Unreal. Pretty cool.
Yeah. It is pretty cool. And then the Rays, they got to step it up, man. We're down 3-2 now.
Yeah.
But, hey, if you started the season and you said if you win 2 games in a row, you'll be the world champion, why not, man? Let's see what happens.
Oh, that's right, man. We got to go for a triple this year. The Rays, the Lightning, and the Buccaneers.
I also said to a friend earlier this week, I said, could you imagine what the odds could have been if you parlayed the Rays, the Bucks, and the Lightning all winning the championship, right? A 3-team parlay for 3 championships on Tampa. Whew. I don't know what kind of odds you could have gotten, but they would have been good ones at the beginning of the year.
There's no doubt, man. There's no doubt. Let's go take a look at Shopify for one of the Tigers out here. So, it's up at 273. Look at this, trading $1,000. So, these numbers are hard to comprehend, folks. Like even when Tommy and I say them from lows to highs for the year, because in my career, I've never. Well, no, I say this in 1998, 99, and you don't want that to replay itself in 2000.
No.
But the low is 282. The high is 1146. This one here, you still get, it's a consolidation. And I'd be trying to get it at the lower end of this consolidation, which is 839. And, that sounds like a lot, but guess what? Meaning on the way down. But it's not a lot on the way down, folks. When you talk,
and I'm sorry, what number did you say? Just what number?
I think it's
8889.
Yeah, right down at that low. Yeah, 839.
839. Okay. Yeah. Because the reason why I say, I mean, the analyzed tab, right? They're priced in a $61 move, but that's looking right on their earnings. When you talk about, if you just want the week, right? It's Monday.
Yeah.
We're talking about an $82 move, man, alone, priced in just for the options expiring on Friday. So that's some volatility, man. You're talking about what, 8%, 9% almost on that equity.
You're going to be busy in your newsletter this week.
We'll see what happens. That's a lot of premium they're pricing in, man. You can do a lot when you're selling options.
Right.
When the market is assigning for a 1 week basis, $85 of potential movements pricing in. That's and the same deal, man. If you think Shopify has a big move and you wanted to buy volatility, well, you needed to move more than $80 this week just to start making money.
Right. Isn't that amazing, man?
It is amazing, man. It is.
So we started the program off, folks, okay? We thought it was unusual that the NASDAQ bottom line was actually up 7 points. Well, the NQs are up 7 points. Guess what? Too much selling inside the Dow and the S&P evidently the NASDAQ just woke up. And not just woke up, but the bottom line is that you get some selling now. Now we're down 93, and that's what the NASDAQ was down prior to the open. So. And
you're seeing the S&P far below that level even now. We just dropped 30 points since 10:15. Not even when we came on the air, and you're now under 3,400. Which remarkable. We're going back. We're right at this level now. 33.97 is what I had on the charts for the high pre-COVID, and we're sitting literally within a few points of that right now at 3,400.
Oh, we gotta stay right there. We gotta look at that quick as soon as we come back. Yeah, that's a big number, man.
It's a critical level, right? I mean, you're now below.
Folks, okay, yeah, and we're gonna get these confirmed ABC structures down.
You want to hold for the entire 2-week process through the election right now? I don't know.
Yeah, it's going to be wild. So let's see. We're 9 point. We need 30 million shares, 36 million, and we got 9.6. An hour in. Stay right there. Come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 577, Nasdaq off 124, S&P's off 51. And let's just get over and we'll take a look at those S&Ps. So ES1, I probably have to do the generic one. And it's pretty amazing when you're down like 52 and it seems like, okay, well, that's normal. Whether you're up 52
I agree,
or down
man.
52.
I was just looking at, go ahead. I was just looking at the price they're charging for S&P. SPY puts and calls, and the move we just had the last half hour is like double it for the week. So
Really? Yeah. We're right at this number, folks. This is intense because that'd be a false break, which Tommy was just saying. There's 3397.50. And we hit 33. Oh, my God. Look what we already hit so far. 3397.25.
There you go.
Now, this is the generic one, so it's tied together. But that in itself, folks, is saying quite a bit, man. You know.
Yeah, I mean, there's nothing to say that we can't, go back down to around 3,200 because you have to keep in context. We have a lot of volatility in the market in terms of unknowns. The GDP number on Thursday is going to be a very important one, even if it's a strong number. We got a lot of earnings to follow that. And these case numbers are spiking, man. They're going to cause a slowdown when you have almost 100,000 new cases a day we're approaching. That's going to hurt the economy. The market's reacting to that. It's an undeniable number I think we're reaching. On top of everything else coming out right now, these numbers are reaching an undeniable level, I think. I mean, you have El Paso reaching hospital capacity. You have the Governor Abbott of Texas having to try and create alternate care sites. You're reaching the hospitalization capacity again, something we haven't dealt with in a while. But we're approaching.
We're not even talking about the amount of businesses that are out of business that are going to be out of business because there's no more money left. I mean,
that's it. I mean, it's, combine the numbers spiking with a stimulus delay, and that I think is what's combining to have the market. And just like that, we're back at 33.97, man. The S&P is down 54 points right now. The Dow's down 550 points.
Ride 'em, cowboy.
Oh boy.
Stay right there, folks. Think or Swim coming up next. I'm